Bonds show a bit of life here as inflation starts to come down. Is it time? We'll talk about that on 3 Minutes on Markets and Money. Before we get to bonds here real quick, just a quick update on the markets. Markets rallied right towards our target zone of 4,000 to 4,100. Kind of failed there yesterday, sold off a bit. Looks to have a bit of follow-through selling this morning. Right now, pre-market open futures are pointing down about 300 points. NASDAQ futures down about 122. We'll see how the market opens up and trades today. But again, a bit of a retracement back here towards support. Won't be surprising. First of all, we've been in a very nice uptrend ever since these September lows. The market rallied right to the top of that uptrend. So a retracement back to the bottom of this uptrend, which is coincidentally about where the 20-day moving average will be, won't be surprising here. That'll keep us confined into this uptrend. Markets are still on a buy signal, but getting a little bit extended here. So the risk is a violation of both the 20 and the 50-day moving average. Now, right now, the 20-day is trading above the 50-day. This is all providing some support for the market on the upside. So again, nothing wrong with the market temporarily, but expect a little bit of a pullback here after the very significant rally we've had from the October lows. Switching gears here, the inflation data that's been coming in lately supporting this market rally, of course, the whole hope of a Fed pivot, is also helping bonds. Weaker inflation helps the long end of the curve. As inflation falls, yields will fall. Yields are a function of economic growth and inflation, so weaker inflation data, weaker economic growth will lead to a fall in yield, a rise in bond prices. And bonds have been performing very nice as of late. We previously discussed that bond prices got extremely oversold during October when we hit those lows. We also triggered a MACD buy signal on bonds. That, just like stocks, says that there's some buying power coming into bonds. Since then, we've established some higher lows. That was very encouraging here for bonds. This is the first time that we've seen kind of some positive price action in bonds after a fairly long sludge lower earlier this year. Starting to see that recovery, bond prices moving above the 50-day moving average yesterday. This opens up a window now for a decent rally to about 112 to 116 on TLT. That'll be a decent advance, about 10 to 15% on bonds from here. So as we've talked about before, pay attention to what's going on in the fixed income market, because weaker inflation data, a Fed pivot, weaker economic growth, the Fed talking about, hey, we want to have weaker growth. We want to have 5% unemployment. That is all very bond friendly on the long end of the curve. So this may be the point here where we start seeing much better price action in bonds. Now, bonds very short-term overbought. So again, this rally has already taken bonds into an overbought position. But the next pullback that holds support, holds the 20-day moving average as an example, establishes another higher low. This could be the pattern that we're looking for to start talking about higher bond prices as we move in to 2023, particularly in light of a weaker economic environment, lower rates of inflation. So don't forget about bonds in your portfolio. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.